All right, so we had been discussing about the fundamental analysis, and then we have understood that only when a company has got the pricing power, then only it will be able to grow its revenue as well as net profit, and the share price would give you phenomenal returns. We have taken an example of Hero Motocorp and Castrol, both from the automobile industry. I told you always compare apple with an apple, orange with an orange. Now this is not a pure comparison because Castrol, though it is into automobile industry, but it is into lubricants. But yet, within automobile industry, if there is a boom in automobile industry, then definitely Castrol would also benefit out of it. Now this company has got a pricing power because only with his name the oil gets sold. You need to do little bit of research on the ground as well. You go to the mechanic and you ask him which is the best oil lubricant. You ask 10 mechanics. 8 of them will say that Castrol. Rest 2 of them will say it doesn't matter. They won't tell any other name, but they'll say it doesn't matter. That means it is a monopoly. There's no second popular brand. Yes, there is Shell. There may be some other small players in the market, but the market share of Castrol is beyond 80%. Like how Google is a monopoly as a search engine, likewise Castrol is a monopoly in the oil lubricant segment. So I would definitely would want to buy this company looking at each ratio in fundamentals. One is operating profit margin. Less than 500 companies will have this kind of margin in our 7,000 companies. That means 92% companies do not have a profit margin of even 20%. I'm talking about gross profit margin. Operating profit margin is also called as gross profit margin, right? These technical words are important because if you read the annual report, if you go through the research reports of the company, you will see that these words will be used there. So you should know exactly what are they trying to say. Yesterday I had given you a task that I would not be buying this company, though everything looks fantastic. Management, no doubt. Fundamental ratios, amazing. Every ratio is amazing, guys. Company is very much undervalued. Price is trading at 120, which deserves a price of minimum 300 according to the current profit loss report. But then I told you why I would not be buying it. I don't know how many of you have worked on it, but yes, Praveen has been very active every task that I give, and very beautifully he has written each of the point. Good work, Praveen. Among all, the most important point is there is no future for this company. It is like Kodak in today's world. That is how you need to prepare yourself, guys. Kodak was like this. Kodak was one of the monopoly business globally. Amazing ratio, everything was good. But what happened? Technology disruption. This is a very, very dangerous word in the stock market. Technology disruption. That is what is happening even to this company. Electric vehicle revolution. In electric vehicles, we do not use lubricants. There are some other lubricants which is not even 10% of what we are using conventionally. That is why I do not know how Castrol would survive. Maybe he will venture into batteries or maybe brake fluid and all that, but that's a very small segment. Main engine lubricant, there will not be of any use in the electric vehicles. So it's only a matter of time. It may happen in next 5 years or next 10 years or next 20 years. But I told you stock market reacts in advance. I'll give you yet another beautiful example. Stock market reacts in advance. So it is not going to wait for that electric revolution to come. The price is undervalued, discounting that revolution. The company is debt free, everything is good. Even if this company shuts down today, you will be making 100 rupees. But if you are holding this for 5 years, I do not guarantee you that even if you would make 10%. Because big investors do not want to buy that stocks which do not have future. So it will remain undervalued for years. These good ratios will be there every year on year. Just like you have bought a land which is very undervalued, but it may happen that till 5 years the price does not shoot up at all. That is how this case is. So also get to know what is happening in the real world. Like this, one very good value trap was there in this company also. Till 5 years back, Gillette India was a monopoly in the razor blades. Even today, I would say it is a monopoly. Even today, Gillette India is a monopoly. It has given fantastic return. A penny stock used to trade at 3-4 crore valuation. Only two blades were there, 7 o'clock and Gillette. Later, Gillette purchased 7 o'clock also. That means 90% market share in grooming industry, men grooming especially. But then what happened? Company 10 rupees blade was able to sell for 300, 500, and believe me, there are razor blades beyond 3000 rupees also. So what technology uses we doesn't know, but those razor blades remain sharp for the entire year even if you are shaving every alternate day. It's an amazing technology. Laser technology is what they are using. Stiff material whatsoever. Company monopoly in its segment and having a profit margin of beyond what Castrol India is enjoying. But what happened? Change in lifestyle, another big disruption. People started growing beard. So the demand for razor blades had fallen like anything. Even today you see the grooms. Before there was time that they used to be clean shaven, that today is my marriage day. So look very good and all that. Now if you do it like this, people laugh at you. Because that is how the lifestyle has changed. Having a beard has become a lifestyle. So in the last 3-4 years, we have been observing this trend. That is why Gillette India's share price is not performing. The sales have fallen drastically. The demand has started increasing for trimmers. So Philips is gaining there. Now Gillette is coming up with his own trimmers. But whatsoever, the main segment, the core business has taken a big hit. So that is why I would not recommend to buy Gillette India also, though everything may look good fundamentally, then technically and maybe management wise also. Management is amazing, guys. Colgate Palmolive management is now into Gillette India. So we would never ever buy such companies which have uncertain future. So that signals will get it. Just don't buy a company blindly because everything is good. Also think little bit how the future could be. And there will be lot of times where a disruption will be an opportunity to enter. Like example, Nestle. Very important words, guys. These things will gain you a maturity, because this will happen every time and again. Maybe after 2 years like this again, some disruption will come or some opportunity will come. So understand the difference between disruption and opportunity. I've talked about the disruption, what can come. Now I'm talking about the opportunity. Nestle, a company from Israel, the top company from Israel, what the world is using. Just like how Hindustan Unilever is what the world uses, likewise Nestle products are much superior than even Hindustan Unilever. Especially in baby products, it has got 80% market share. One of its product is Maggi, which is popular in India. It's not a core business. Core business is baby products. A Cerelac will cost 300 rupees and the manufacturing cost is less than 50 rupees, guys. Like Johnson and Johnson, Nestle is good for baby food. And if you talk about the new generation people, youngsters are very much brand conscious. They do not prefer any other brand. Nestle means Nestle only. That's how even my wife used to say, that's why I'm saying this. So Cerelac only of Nestle brand. No other food. Even doctors and all, they recommend this brand. So Nestle Maggi, when Baba Ramdev wanted to enter into FMCG business with Patanjali food, he wanted some kind of entry, just like how Jio came up with a disruption offer, like that Patanjali. So it is not legally proven, but this is what I think. through some political support, case was filed on Nestle that Maggi is not safe to eat because of high lead content. Order came out from the Food Association of India that Maggi has to be banned on immediate basis. Not good for consumption, not safe for consumption. That's all. Headlines everywhere. When you're after the class, when you're free, try to check the graph of Nestle during the year 2017-18, somewhere 16-17-18. The price of Nestle fell down by 50%, guys. The price of Nestle fell down by 50%. I'll give one more example of opportunity. Now, logically, you need to think. If you have already done the research, read the annual reports, you would already know that Nestle is only 10% of the business of Maggi is only the 10% business of Nestle. Nothing happened to the baby food business. Point one. So even if we consider that okay, Maggi is totally banned, no more Maggi packets and all. First of all, company is so big that they will not keep quiet. They'll come out with some other formula. Like Patanjali is creating in atta noodles, they can also do it. I'm sure that even after the change in the formula of their masala, they would taste better than any other brand. We have seen in the last 20 years, 30 years that since we have been eating Maggi, since we have been eating Cadbury chocolate, there is no other brand which can have the similar taste. Ferrero Rocher, I would say, is little closer to Cadbury, but Cadbury is a Cadbury, Maggi is a Maggi. That is monopoly. So first of all, let's say that he doesn't come out with some new noodles, no atta noodles, no reduce in lead content. So the case was as such that reduce the lead content, and people started thinking that Maggi is banned. These were fake headlines. That panic, you should have taken an opportunity to buy. Within 1 year, it gave more than double the return. Next opportunity, Vodafone Idea. I already told you this. When the Supreme Court judgment had come that Vodafone Idea has to pay 70,000 crore dues, the price of Vodafone Idea tumbled from, so it was like used to trade at 100, 120 rupees, already started falling, and within 1 month the price from 10 rupees came down to 2.4 rupees. Every news channel I've seen that there's a headline that idea is finished, idea is finished, idea is finished, idea is finished. I did my own research. I found out, like, will government allow a duopoly business? So if you see my history in the group and all, I had recommended Vodafone Idea plus Bharti Airtel. That time I said that those who can take risk buy Vodafone Idea in panic. That time it was 3.4, 3.5 rupees. Though it traded at 2.4, but when it started rising, I got a bit confident. Two things I told you, very important. When the price continuously falls, and suddenly a bad news comes and the price rises, then that becomes the bottom for the share price. Keep this point always in mind. It happens for the market, it happens for the stock also. So people will get surprised why on this bad news the price is rising. For once it will react. That bad news comes in a flash and the price crashes. Then quickly it recovers and it closes positively. And that is where you need to make up your mind that the worst is over. That is how I was thinking. People started thinking that this is the beginning of the end. But I started thinking that this is the beginning of the emergence. So at 3.4, 3.5, whoever bought it, in a matter of 2 weeks, the money got doubled. Even today it is trading at 8, but that time it was a very quick return. In a matter of just 1.5 years, if you are able to make, even if you are holding it till now, you are more than doubled. But when you are getting that superlative returns within 2 weeks, at least 50% you would have booked out and invest into some other opportunity. The question is, how did that guts come that 70,000 crore company has to pay? Then the chances of bankruptcy is also there. There's no doubt about it. So the money what we had put, we are mentally prepared that company may become bankrupt also. So it's not that I've sold all my shares and bought it. I only bought worth 3 lakh. But like that opportunity, at least 10%, 20% of your capital, you have to use it for such opportunity. Maybe out of 10, 1 will fail, but the 9 will multiply your money in short term itself. Now, why this company would survive? Why that high conviction was there with me? One is government will not ever allow duopoly business in telecom, because then what will happen is Jio and Airtel, they both will shake hands and they'll start increasing the price and the public will lose like anything. Point one. Point two, we already were under an unemployment crisis. Government job openings were very less and all that, and Jio had employed 40,000 people. Where would they go? Point number three, there's big investment of foreign investors. See, Vodafone Idea is nothing but Vodafone and Idea together. They have created this company, and you may not be familiar. You go to UK and you know about Vodafone, top class company, like how Jio and Airtel is here. There it is Vodafone, most profitable company. So something this brand would do. It is a prestige issue for them, na? Vodafone has, if it wants, it can give 1 lakh crore just like that to save the company. So something this management, both this management, this is Birla management and this is your Vodafone UK management, something they would definitely do in order to save the company, because their own money is involved in the company. Point number four, ship too big to sink. Customer base 25 crore. And there was a research done, like in the research paper, I heard that even if Vodafone Idea goes bankrupt, it will take at least 3 years to establish so many towers for proper connectivity. Meaning, there will be a lot of connectivity issues if Vodafone goes for bankruptcy. You will not be able to make calls easily, because whether you know it or not, while you are making call from Airtel mobile to Jio, but in the intermediate there may be Idea tower also which is being used. So they have a mutual understanding. So whatever the tower signals that passes through their own towers, they pay a royalty for it. Otherwise, what will happen in the same building? Jio will put a tower, Airtel will put a tower, Vodafone Idea will put a tower. So why to waste money? One tower when it can be sufficient to serve all the three telecom players. So this is a business which happens, which is a mutual understanding. This is a rule by the government. So if this company goes bankrupt, it will be heavy loss. And then lastly, even if this company goes bankrupt, either Airtel or Jio would be buying it. For both of them, 70,000 crore money is nothing. But what is the advantage they would get is the pricing power. See, if I and you are the only players in telecom industry, you have 50 crore customers, I have 50 crore customers. Now we both are not enemies, we are friends. I'll say that, see, there is no third player, guys. Let us increase the price of 4G data, let us increase the price of mobile data every month, 10 rupees will increase, both of them will benefit. So looking at that opportunity, either Jio would buy it or Airtel would buy it. So looking at all these points, it was a compelling buy. I don't say to buy right now at 8-9 rupees. No, the story is over now. That extreme panic gave you a deep discount. Take the opportunity of it. Like this panic, let me tell you guys, will come in large cap companies, mid cap companies, small cap companies, and it comes even in index during the recession times. And this is like once in lifetime opportunity. We don't get like these stories every day. It comes once in 2, 3, 4 years. If you miss it, you miss the opportunity. You have missed an element of multiplying your money. And I told you how much it could cost you, because you know the power of compounding. In short term, if you are able to create maximum wealth, we should never leave that opportunity, because money makes money here. So an opportunity lost is actually a notional loss for us. Don't let that happen. Clear? So like these opportunities, and this will come time and again. It happens in America, it happens in India. It is up to you, how do you capitalize on it. Like right now I'm saying NMDC at 104 is very good investment bet for next 3 years. First thing is, we are into the old economic cycle. The price of NMDC is already down from 220 to 104 rupees. Just have a look. The price used to be 500 rupees in 2010. But let us forget 5 years. Let us talk about 1 year only. The price was 174 a year back. It was beyond 200, but this company got demerged now. They still business separately. Yeah. So this 193 plus another 30 rupees you can add, which is for the steel business because the company got demerged. So looking at the ratio and all, we already are very clear with the ratios. Dividend yield, look at the dividend yield. You are going to get double than the fixed deposit just by holding this company. PE ratio is only 4.02. Only drawback is that it is a government company. Very important point now. Every word that I'm saying, notice it. It is a government company. So what is the problem with the government company? I told you that management is not at all ambitious. But this company does not require ambitious management at all. Why? Because this company's pure business is mining. See, when do you require good management? When you want to expand and all. It's not expanding. How much of a demand of iron ore is there? This company has to take it from the underground, refine it and sell it. That's all. That means this company's entire business, every day you can see that you check the iron ore price. If the iron ore price is rising, NMDC will rise. If iron ore price is reducing, NMDC will reduce. That means here management is not an issue until and unless there is some fraud. Frauds do happen, but in the last 20 years we did not hear. Maybe it is happening in a very small scale which is coming unnoticed. In banks and all only the frauds happen maximum. That's why PSU banks are very risky. If I'm a management of a PSU bank, you are say Vijay Mallya, I would pass 1000 crore loan because I have that right and just my signature would do. I don't require approval from anybody. But in mining, you have to provide the balance sheet and all. You have to tell how much iron ore you have sold. And then they tally, the inspection committee tallies. Wherever you have sold, they'll see whether so much of tons of iron ore has come or not. So here maybe in small scale they can do fraud, but not in large scale. So to that extent, the limitation of fraud is there. Government company, that is one big danger we have fraud. So in this type of company at least, we do not have to worry about fraud. Second thing, we do not require ambitious management and management is never ambitious in a government company. But this company's profit totally depends upon iron ore. Company is debt free. Company has got 8,000 crore cash. P ratio is only 4. Dividend yield is 14%. Price is already down nearly 50%. And we are in the old economy cycle about to emerge. All the metal stocks are rising. Time for NMDC to enter. So maybe you can get 3 times, 4 times return in a matter of 2-3 years. Plus dividend, that's a bonus. Dividend topic will come little later. So had it been a private company, I would have given a target of 1000 rupees. Because it's a government company, at least 3 times, 4 times we can easily expect. And look at what, you can see a trailer here. Huh? What happened in the previous boom. Okay, we do not have chart beyond that, but let's see in BSC we have it. No, we won't have. So price from 170 went up to 500 rupees. And here if you see the price was somewhere around 80-90 rupees, it went up to 500. So sharp rise can be expected even here guys, because this is how the world economy cycle turns. Then I told you lackluster for several years, no movement at all. So this is not to hold for years and years, it is only to hold it till the euphoric stage of the market. Then we will not touch NMDC for the next 10 years. Metal stocks do pathetic. Hope it is clear. Yesterday I had shown you that I am holding some Equitas holding because of the company looks very much undervalued. That is also from the finance category. So yesterday the price rose well, some 7%. What we get in bank in a year, you choose quality stock, in a very short term you can get that return. So those who want to aim for only 15%, 20% return, but on the very, very safe side, just like fixed deposit, these are the companies you need to invest. Like this, there are plenty. Government companies are very good from dividend perspective. That means 10%, 11%, 12%, 15% you will make just sitting on chair. Do nothing. That dividend will come on time, precisely. And every year it will come. And why it will come? Because government is also owning shares in it. When the dividend is released from a private company account, the money gets transferred to the government account, which they need it every year to pay to the military, to pay the salaries to the government staff and all that. So that's a compulsion rule that a government company has to pay dividend no matter what, if it is profitable. So high dividend yield can definitely be expected from government companies. But if you enter in the wrong time, then in 10 years you'll only get dividend but you will not get price appreciation. Like NMDC in the last 10 years, lackluster movement. But that last 10 years movement is going to come in the next 3 years, guys. Minimum 300 rupees is what you have to expect. Minimum, I am saying. And I will not be surprised to see it at even 500. And dividend yield, minimum 70-80 rupees you will get it. Even if nothing happens in the next 3-4 years, you should be making at least 70 to 80 rupees only in dividend. I am expecting 20-30% dividend yield in this. Right now you may get only 15 rupees, but the share price becomes 200, on that 15% is 30 rupees. Share price becomes 500, on that 20% is 100 rupees. That is all bonus income. So you want a large cap company, very safe, stable, with the dividends, or I am a retired person, I want 1% for my capital every month. Invest in this. Let market go to hell. This company 12% you will get it. Alright. So among metal stocks, I don't prefer Tata Steel, but I would prefer NMDC. And when you look at each of the fundamental ratio that once we complete, you yourself will be able to judge, like how we have compared IFL Finance to the other finance based companies. Like that, compare NMDC to other metal companies like JSW Steel, or you talk about say Tata Steel, you talk about Jindal Steel, like that, so many, Ispat, so SAIL, Steel Authority of India. When you do a comparison, you'll say that the company price should be minimum 200 even today, even if it is a government company. If it's a private company, price should have been 500. You would say that. Alright, the next issue. So operating profit margin is clear. Next comes the net profit margin. NPM. This is also an important figure. End of the day, actually this is what matters. More than 6,000 companies, net profit margin is less than 5%. Now you very well know how good companies are there in any exchange. So if a company is doing a sales of 100 crore, after paying for the debt, after paying for the finance cost, after paying everything, the company should be making minimum 5 crore. On 100 crore, at least make 5 crore, yeah. Otherwise your business is very ordinary business. We want extraordinary business, because only extraordinary business will multiply your money. Otherwise this will be like a fixed deposit return, that's all. So do not invest into any company whose net profit margin is less than 5%. All right. Now coming to return on my favorite ratios. Two of my most favorite ratios. See, some person will look at loans, how much loan company has got. Everybody see, like if you want to buy a mobile, you will see how slim it looks. Some other person may see how is the camera. Third person may see what is the configuration. Fourth person may see what is the brand. Fifth person may see what is the price. Most importantly, so like that everybody has got their own priority while choosing a mobile. Likewise for laptop also. Likewise for every investor, some will get attracted by the P ratio, some will get attracted by the quantum of loan that the company has taken, some will get attracted by the technical charts of the company, some will get attracted by the management. So I purely get attracted, or the first thing that I look into for any company is the ROA and ROE. What is this ROA? What is this ROE that I am very much fond of? Any company, if you ask me, firstly I'll see this. This can be game changing, and 90% people ignore this one. Everybody sees the dividend yield, everybody sees the market cap, everybody sees the P ratio, and we should always do what others are not doing. The real game, the real multi-baggers secret formula is in ROA and ROE, return on assets, return on equity. Firstly write down, then I'll explain how this ratio is very important. Equity and net worth both are same. I already told you this. Yes. Any doubts, guys? Not able to hear you. Srihari, what's your doubt? There seems to be some issue with your device, Srihari, not able to hear you. You can post your query in the chat window if you wish. Now I am going to give you a small exercise. I'll show you two companies, company A and company B, with basic details. How much loans they have got, how much properties they have got, how much business they are doing, how much net profit they are making. You have to tell me which company looks better for investment. If you had money, which company you would invest? That is what you are going to tell me. Both of these are cement based companies. Let us do this exercise. So these are the two companies in front of you. You have got 1 crore cash in your suitcase and you are going to the industrial area of Hyderabad. You would want to invest into cement business because you see that cement is has no replacement. Cement is a cement after all. Widely used for road construction, bridges, then houses, buildings, everywhere cement is used. So there is no question of doubt that any technology disruption would be there or anything as such. You may have seen that some buildings do not require cement, there are ready made bricks which come, but those bricks are made with cement. Okay, so cement is a need, whether you like it or not, whether how much expensive it might become, but cement will remain a cement. So no doubt business does not have any technology disruption. So you plan with 1 crore, you plan to buy a factory, ready made factory. But every cement brand is different, right? Some are expensive, some are cheap. Some machinery is efficient, some is not efficient. Some are working large scale, some are working small scale. Some are working for government tenders, some are working for private. Some are able to make their own consumption. An infrastructure company, a real estate company is there which does 100 crore turnover, it will have its own cement plant or it will have a partnership in a cement plant. Like that, within cement business also you'll find lot of variation. So with 1 crore that you have it, you find two companies in front of you, company A and company B. Both are selling it for 1 crore. The difference being, company A is doing a turnover of only 70 lakh, company B does a turnover of 1 lakh. But both of them operating profit margin is same, earning before interest and tax or operating profit again is same after your excise duty and all that. Net profit after the taxes, after the EMI, everything remains same. Let's say both of these companies are debt free, zero loan. So after paying for the government tax, 30 lakh is left over to them. So only difference what you find here, main difference is the total property value. The company A property value is only 30 lakh, company B property value is 90 lakh. You have 1 crore cash with you and you have to buy company A with same profit or company B with same profit. But company A, I tell you that the land machinery is a small factory. Okay, the size of the factory is small. That is why it's only available for 30 lakh. The value of the land, machinery, everything. For him, the small land is sufficient. But this guy requires huge land. Maybe the machine is bigger in size. But the value of land and machinery together is 90 lakh. It means that if you shut down the company B, you will be getting this 90 lakh day one. So risk looks like only of 10 lakh. Here if you shut it down, 70% risk will be there, and that is in case if you are shutting it down. So margin of safety does look to be good in company B compared to company A. But still, I want you to think deeply and tell me which company would you invest, company A or company B, and also justify your answer. I'll give you 2 minutes of time. You can use the chat window to post your answers, or you can even use the audio control. 2 minutes time starts now. This will be is a judgment, This will tell you how beautifully you can identify a company. See, investment is an art, it is a kala. You are having 7,000 businesses in front of you. You must have that art, you must have that skill to choose a perfect company to put in your money. You are an investment partner there.
Yeah, sir. There are two things which I would like to mention.
Yes,
So first is like आपने जो mention किया, company B is more secured.
yes,
The risk is comparatively less,
correct.
right? And so obviously like like more risk and more rewards. I mean that is a basic thumb rule that I would like to look into.
That,
Point number one. Second thing is within annual sales of 70 lakh, they are making a profit of 30 lakh,
yeah,
and their EBIT is also 45 lakh.
yeah,
If you look into that, I mean, let's say the company is actually like growing at somewhere 40%, 45%.
hmm. You
But
mean to say
here,
margin?
when we look at company, yeah, sir.
Huh,
When we look at the company B, they are growing at only 30%.
yeah.
So that would be my second point where I would be considering.
So you prefer company B for investment, is it?
Company A, sir.
Company A,
Yeah,
because the profit margin is good.
yeah, sir.
So what advantage will it give? Net profit. End of the day, it is net profit, na? See how much your profit it might be.
No,
What I am seeing is that I am investing 1 crore, I am getting 30 lakh here. I am investing 1 crore here also, I am getting 30 lakh. So my return is 30%. So let the profit
ah,
margin be 1%, let it be 50%, let it be 1000%. But my return on investment is going to be 30%, plus margin of safety is going to be 90 lakh. The risk element is going to be only 10 lakh. Here the risk element is 70 lakh.
okay.
We look at operating profit margin and all that only when we are getting the company at a different price. But when you are getting at the same price, what matters is the net profit.
Hmm.
Let's say that you want to give your money for finance, secured loan. Okay. So while that you're giving your money for secured loan, one guy will say that I'll give you 90 lakh worth of jewelry. Please give me 1 crore loan. Other guy says that I'll give you 30 lakh worth of jewelry. Give me 1 crore loan. Both of them are ready to pay you 30% interest. Which one would you prefer? Obviously, the jewelry
So
proves
obviously
to
the
be 90 lakh
90 lakh.
security, isn't it?
Okay.
To take both of them, it is risky because if they do not pay, you are actually losing 10 lakh. But in stock market, there will be risk in every company. You are not going to get for free. You'll have to pay premium because of goodwill value. Today, let's say company like Uber or company like Swiggy, Zomato. Today, Zomato is operating in loss. So you'll say that sir, company is operating in loss, so give it to me for free. Then why people are paying 20,000 crore valuation for it? So because company has got that goodwill value, that Swiggy app is there in most of the users' mobile. That is the goodwill value. That's a ready-made business value. Like Uber does not have a single car of his own. So asset-wise, it is nothing. Only one app is there. That app is worth 10 crore. Apart from that, company has nothing. Then why should I buy for 1 lakh crore? Because that entry barrier what he has created, the user's addiction to that particular app, that we cannot get it if we start with a new company. That is the value for it. So Bhargav says company A is good because of operating profit margin, but I would not be buying based on that. There's something else that I would want to see, because operating profit margin, end of the day, everything gets reflected in net profit. What matters to me is that I am paying 1 crore, I am getting 30 lakh in return. So this is the most important thing for me. I'm not bothered about what is happening here in between. Only thing in this entire, I'll give you a clue. In this entire thing, only difference is here. These three ratios are actually of useless for us. Not important at all, because our investment is same. This is same. The difference is here.
Can we say the ROA,
Yeah, what is the ROA?
our return on assets?
How much it is for company A? For company A, the ROA, return on assets, is 100%, because properties is 30 lakh, net profit is 30 lakh. That is what is ROA, net profit divided by total properties. And
Yeah.
here ROA is only 33%. So here ROA is 100%, here ROA is 33%. That is of course the difference. But why does it matter? Why ROE should matter when I am making 30% return on my invested capital? Only that should matter, right? You are buying a factory A, you are buying factory B. In both the cases, you will get only 30% return, I am saying. But with factory A, you will get less properties. With factory B, you will get more properties. 99% of the people would choose company B, but the fact is company A is much, much better than company B. This is how you create multi-baggers. That is how you go away from the crowd. 90% public will be investing in this company thinking about margin of safety. अरे गया तो सिर्फ 10 लाख ही जाएगा ना. Even if company goes, it shuts down the business, because both are debt free. If the company shuts down, I will lose only 10 lakh. But if the company is running at least for 3 months, I'll make 10 lakh profit and my money is safe. Every year they'll think like that only. And they are actually jamming their money. But here you know what happens. You will be able to multiply your money. I'll tell you why. First of all, understand, any big company is run by a very, very efficient man. Now you'll get to know what is the advantage of a jockey. Why do you think Sundar Pichai has to be given a salary of 3,000 crore? Did you ever wonder? Did you ever wonder why Sundar Pichai should be given a 3,000 crore salary? Why your Tim Cook, CEO of Apple, has to be given 2,000 crore salary? Why do they prefer the students from IIM background, from Stanford University? Why? After all, business is running on autopilot, isn't it? Why Ambani has to take 100 crore salary from his company when he's already growing it? Because we may not have experienced it, but if you see, they have sleepless nights. They have immense pressure. What is the pressure? Company, Google has to grow by 30%. I don't know what you are going to do. 100 lakh crore company should become 130 lakh crore. The company pay them 3,000 crore salary, but they want 30 lakh crore worth should be added to their company. That is the immense pressure they have to deal with. It doesn't happen, then a board meeting will get conducted. All the big managers under him, 100 managers, 1,000 good shareholders, big investors from mutual fund industry, they'll question Sundar Pichai, on what basis are you taking 3,000 crore salary? Show me the net worth of Google. Why the share price has fallen by 30%? What is the new thing you are going to bring? That pressure is there. That is why IIM seat is not so easy to get. Those management are so advanced that only one thing goes in their mind. Only one thing goes in their mind. How to multiply money. How to multiply money. It becomes very easy for any management to multiply money with company A faster than company B. So let us understand. See, we are looking from first year perspective. I told you when you are investing, always think long term. Let us take 5 years under consideration. What can happen with company A in 5 years? What can happen with company B in 5 years? Fair enough. So company A after 1 year, till 1 year both look same. That's why we prefer company B, because our vision is very limited. I told you, think out of the box. Innovative thinking is very important to be in a winner category in stock market. Don't think from 1 year perspective. Don't think from 6 months perspective. Think from 3 years, 5 years down the line. If you are thinking from 1 year perspective, then definitely you would have bought Castrol India. But you think from 5 years, 10 years perspective, you would not buy it. You will not even touch that company. There's no need to do fundamental analysis. Because story is very clear. Companies purely into lubricant segment, and lubricants do not have future. Don't know what this company will do. Let it do something. Let it prove in that segment also that it is a brand. Then we'll think about it. Now here, in 1 year, after 1 year, let's say what is the story after 1 year? 1 year, company A has got 30 lakh cash balance or bank balance because it has earned that profit. And so does company B. Clear? What do you think company A will do with that 30 lakh? Will it put in bank to get fixed deposit? Never. I told you, management are from the IM background. They want every rupee to work. They are not here to park their money in bank. They are here to make the money work. What is the best they can do is reinvest this 30 lakh in their own business by expanding. How much do they need to double the factory, to start one more factory? Only 30 lakh. I have already told you here that the total property, the land and machinery what company A requires is only 30 lakh to expand. So in the second year, this company will be running with double speed, with double numbers, because it has got 2 factories now. But what company B will do? He has to wait for the 90 lakh to get accumulated to double the business. So in second year, what will happen? Company A will be having a profit of 60 lakh. Company B will be still running with a profit of 30 lakh because it has still got a single factory. What do you think will happen in the third year? 60 lakh they have got, they will create 2 factories. They will make 1.2 crore, and this company would still be making 30 lakh. You are jamming your money in company B. I agree, there is margin of safety. But why should we even think that the company will shut down when it is a profitable business? If it shuts down, then I'll tell you. If I say that both this company will run only for 2 years, if I tell you that both these companies will run only for 1 year, if I tell you both these companies will run only for 3 years, then you may think about the margin of safety. But we are investing thinking that company will go for years and years, guys. Be optimistic. This can be the story after 5 years. Company's net profit will be 9.6 crore. Company B profit will still stand at 1 crore. It looked all same by looking at the return on capital. 1 lakh, 1 crore is what we are investing, 30 lakh is what we are getting. So return on capital is not important, return on assets is important, which will tell you how fast a company can expand the business. We want company to expand the business fastest. Then only you will grow your wealth. So companies with high ROA and ROE can expand the business very fast. This is the key takeaway here. Right on. The cost of expansion should be very less, guys, compared to the net profit. I repeat, the cost of expansion should be very less with regard to the net profit. That is what ROA and ROE signifies. And only when that is there, a small company can become large company in no time. Otherwise, it will take lot of time for the companies to grow. Slowly and steadily, like a tortoise, it will grow. No doubt you may not lose in that company, but you will not gain big also. See, we are playing T20 match. Why do you want to watch test match? The current world is fast and furious. Do you love watching T20 match or you love watching test match? Company B is test match. Company A is T20. Fast and furious. That is how Elon Musk has become the richest person in the world. That's how any top 100 billionaires in the world, talk any name. The secret formula there, if you would see, is high ROA and ROE. That's why they could expand fast. Otherwise, with company B, you will become rich, no doubt, but maybe by the time you become very old, your next generation would enjoy that money, not you. If you want to enjoy it, we know the power of compounding. Time value. Do not ever ignore time. Time is very much underrated, guys. Every day is important for us. Every day 1% earned can become like a huge wealth. You can't even imagine. In 3 years, it becomes more than 2000 times if you are making 1% a day. 3 years, more than 2000 times, I'm saying. Do the math. Alright? A high ROA and ROE company can expand the business very fast and thereby can create huge wealth in short term. And you don't have to take the headache what the company will do with the net profit. One thing we are very sure, that company is run by a management who are from the big business schools or from the IIM background and all that. They are not here to park the money in bank. They are not here to work for the safety of margin. They are here to create a name for their company, like Adani, like Ambani. That is their target. So you don't worry, that worries to them. You just look at a formula, whether the company has got that ingredient or not. That ingredient is ROA, ROE. If it has it, they'll do something. And automatically you will see that high ROA and ROE companies are monopoly. Automatically, this is a proven truth, already tested one. Companies with high ROA and ROE is automatically monopoly. How much high it is, that much better it is. Any ROA ratio beyond 20% is a jackpot. Any ROA beyond 20% is a jackpot. Now, I'll tell you how this thing can make a difference even in real life. Let us say that I want to run a hotel business. Forget all stock market and all. Let us talk now as a person. They say na, baniya buddhi, komti, like how there are particular class of people who are very much business efficient. Then there are other class of people who are not that business efficient. So Kumtis are said to be very much business efficient. Their mind is like that. Even Marwadis are like that. Gujaratis are like that. That's why if you see, most of them have created huge wealth for themselves, for their family. Because their mindset is like that. You may say business is after all a business, it all depends upon luck. No, totally wrong. Business does not only depend upon luck. I agree. Luck is an element there. But how you are using the capital is entirely what a business is about. If you are buying a running business, how are you using the funds is which will decide where you are going to be after 10 years, 20 years, or where your company is going to be. Today we'll take a practical example. Let's say I have 1 crore rupees. Let's say, imagine. And I want to start a business, and I decide to start with a hotel business. What is my target? My 1 crore should become quickly 2 crore, 3 crore, 10 crore, 20 crore. That is my target, end of the day. Anybody's target would be to get maximum returns on the money that we are investing. That is maximum returns on our capital. That is what we want end of the day. Not for 1 year, 2 years, from 5 years, 10 years, long term perspective. Now to run a hotel business, I've got a choice. What is that? One thing what I can do is buy a hotel or build a hotel, let's say with 1 crore. Maybe in metro cities and all, I will not be able to do much with 1 crore. But let us still, as a hypothetical example, we'll take it. I buy a hotel for 1 crore and then provide every room on rent. Let's say that I am able to run 10 rooms with it. Entire building is mine now. Land is mine, plot is mine, building construction, entire building unit is mine. And I am running 10 rooms in it. And I am able to make 20 lakh profit. Alright, this is one thing I can do. Another thing what I can do is take 10 units, 10 building units for rent. This is only one unit. In one unit 10 rooms are there. Rather than I'm taking 10 buildings not by buying, but by renting, by paying that 10 lakh advance to each of them and then run a business. In this case, my profit would be post your rent and all that, maybe 40 lakh. The problem with majority of us, especially Indians, I would say, now you get to know why India is not growing, why America is growing. The problem with majority of us is that we would choose this route. You know why? అరే టెన్షన్ ఉండదు మామ, బిల్డింగ్ మనదే, నో రెంట్ నథింగ్, నడిస్తే మంచిదే, నడవకపోయినా కూడా మనం మంచిగా పడుకోవచ్చు. కానీ ఏమవుతుంది, 20 lakh ప్రాఫిట్ యూ విల్ మేక్, అగైన్ విల్ మేక్ 20 lakh. 5 years తర్వాత ఇంకొక బిల్డింగ్ కొనగలుగుతావు. యూ విల్ హ్యావ్ టు వెయిట్ ఫర్ 5 years టు బికమ్ డబుల్ నెట్ వర్త్. ఎవరైనా ఫ్రెండ్ అడుగుతారు, అన్న ఏం చేసినావు, ఒక బిల్డింగ్ నేను రన్ చేస్తున్నా. 3 years తర్వాత కలిసి ఏం చేస్తున్నావు, ఒక బిల్డింగ్ రన్ చేస్తున్నా, అంతే, ఏం ప్రోగ్రెస్ లేదు. 4 years తర్వాత ఒక బిల్డింగ్ నడిపిస్తున్నా. 5 years తర్వాత అంటావు ఇంకొక హోటల్ స్టార్ట్ చేసిన. అలా ఉన్నప్పుడు ప్యారడైజ్ బిర్యానీ లాగా 20 yearsలో 20 లొకేషన్స్లో వెళ్తాయి. 5 years లోపల వెళ్ళిపోవాలి మొత్తం ఆల్ ఓవర్ ఇండియా కవర్. దాన్ని అంటారు బిజినెస్ ఎఫిషియన్సీ. నీ హోటల్కి అంత మంచి పేరు ఉన్నప్పుడు వై ఆర్ యూ వెయిటింగ్ ఫర్ సచ్ ఎ లాంగ్ టైమ్? So take 10 buildings on rent rather and make double the profit. With that 40 lakh, next time you will be able to run 14 units. Every year you are progressing. Then you will be making, let's say, 50 lakh profit. The next year you will be running with 20 units. Within 2 years you are doing double business. That is where the return on capital comes. Never jam your money. That is very important for any company. That is where the management has to work. They are never made for putting money in bank, guys. They are never made for running business safely. They are always made for running a business like a horse jockey. Run, run, run. Make our company the biggest company, the fastest growing company. That is the target they have. They are not paying Sundar Pichai that, okay, we should not make loss. Even if he doesn't work, also company will make amazing profit. They are paying him to make Google a company which no other company can even come close to it. For that they have to think in this way. Alright? So always take this figure into mind. Return on capital, what would happen after 5 years, what would happen with 10 years if you are doing this kind of business. Because if you see even today, there is only one company that I know which are operating in this way. That's why I had recommended a lot of people to buy Lemon Tree Hotel during the pandemic time when it was available at 20 rupees. Today the price is 100 rupees. 5 times return. This is only company. Otherwise Taj Hotel and all that, flop business. People love Taj Hotel. I would not buy even a single share of Taj Hotel. Their return on assets and return on equity, you see it, you laugh at it. You can do better business than them. Yeah, I agree. Good property they have got. What should I do with property? Is he selling it? If he sells it, then I'll buy. I'll buy the shares of it thinking that property value is high. But they're not selling the property, na? Since 20 years like that only, graph is like this only, static. Next 20 years also you won't make any money and you keep telling everybody I'm having shares of Taj Hotel, Taj Hotel. Lemon Tree will give you much better return. So like this, you have to go deeply into the company and find out what is ROA and ROE. That will tell you the entire story of the company. If the high ROA is there is no iota of doubt that management is perfect, guys. Management is not jamming the money. You block the money, that is where your growth stops, your progress stops, or it becomes very, very slow. You are wasting time and your money is also being blocked. That is a double disadvantage. So taking an example of like this, now you'll get to know the difference between ROA and ROE. So I have got 1 crore and I run a hotel business. Rather what I do, there's another option that I can do. I see that this business is doing good and can give me 20% yield. I take 1 crore loan also. 1 crore money with me plus 1 crore loan. Okay. So what I do, I buy 1 crore worth of hotels. So with first hotel I make 20 lakh profit. With second hotel I make only 10 lakh profit. Why? Because another 10 lakh goes for EMI or interest. Because I have taken 1 crore loan. So even in this case I am actually making 30 lakh profit. This is much better. Rather than 20 lakh profit, now I am making 30 lakh profit. My investment is only 1 crore. End of the day, what matters is that what did I put, what did I get? So this is ROE. This is ROA. Hope you have got the difference. Return on equity is nothing but on your capital what return you got. Return on assets is nothing but what return you would have got on the total capital. So with this as an example, write it down. Now I leave it up to you whether you want to check ROA or ROE, but both these ratios are very important. The difference what you see, you can roughly estimate how much loans company has taken. If there is a huge difference between ROA and ROE for any company, you can consider yourself that company is already taken good amount of loan. Now taking loan, is it good or bad? The answer is both yes and no. Depends. You take a loan up to an extent, I should say it is good. You are taking beyond control, then it is maybe during tough time like COVID and all, you will face a lot of difficulty. So they take a loan better because they are getting much better than the EMI. After paying EMI also, there's something is left over which is directly affecting the return on capital. But to an extent you have to take it. You say that 1 crore with me, I take 2 crore loan, then that is bad. No doubt ROA will be very good. But this will be bad and risk will be very high. That means the vehicle is moving with full speed. Either you reach your destination fast or you meet with an accident. So I'll tell you till what extent company should take a loan, and beyond that if they are taking loan, then your ROA does not make sense, guys. Everything has to be carefully calculated while investing. Every rupee counts. That's all guys for today. It's already past 9. Hope it was an interesting session. There's more to come. Any doubts, questions, make use of chat window or the audio control. That's all from my side.